Welcome to the Broken Pie Chart Podcast, episode 300, Jay. We did
it. 300. Congratulations, Derek.
I'm your host, Derek Moore. With me once again is my, can I just call you a co-host? If you miss a show, you go back to semi-permanent co-host.
You just hear a J. That's good enough.
Yeah, there you go.
By the way, I got a funny story for you.
Let's do it.
It's about me. It's not about you. So I want today to be about you, except for this story. So I didn't even prepare you for this. So by the way, I have mentioned the Broken Pie Chart on some of my recent interviews. You know, from time to time, I'll hop on and do an interview with with the YouTubers. So plenty of friends out there that love to have us on. I would say, so I guess getting a little notoriety. We had an issue with my car. I think I told you that earlier, right? And they were bringing a loaner to my house. And as they pulled up and dropped it off, the guy dropping it off said, "Is by any chance your husband, Jay Pestrichelli, that manages the Yield Max funds?" I'm just saying the brand name. And the guys, and Lynn's like, "Yes." He's like, "I love that guy. I love him on YouTube." It was very funny. So, although today is all about you, I got one little piece about me that now people are recognizing me that are dropping off cars in my driveway.
That's funny.
So
I don't know. That's really
today
really funny.
Is about you. So, Derek, this is like 6 years, basically 5.7 years. If you go 52 weeks, you've been really good about doing one every week.
Yeah, August of 2018.
Yeah. So I thought, a little memory lane here, to go down and see how the market was trading in August of 2018.
Yeah.
Right. So let's see. S&P in August of 2018 was somewhere around 2,200, right? 20s.
Mm-hmm. Yeah.
I guess it depends. 18 was a weird year, right? You saw 2,500. It was, do we even touch 3,000? We were talking about 3,000 back then was kind of the top. It couldn't get through that. It took all the way until 2019. Let's talk about, I would say the 10-year, but that's meh. How about a fun stock? How about one of your favorites? How about Nvidia? Where was it trading?
Where was that? Yeah.
August of 2018.
Probably would have been a good time to buy that.
Oh, that not that I would give out a recommendation, but split adjusted, $6, about $6.
Okay.
$6.
Probably should have bought it.
Where's Nvidia trading today?
Not $6.
More than $6. Try 140. Okay, that was pretty good. How about everybody's favorite? How about Tesla? Right, that was the stock to pay attention to, back then. So let's see where Tesla was in August of 18. Somewhere in the neighborhood of $22. $22. Today trading over 300, I believe, right? No. Where is it right now? I should probably know that one off the top of my head. 352.
Yeah.
That's good little appreciation. You want another good one that I love talking about? And
Bitcoin? You going to tell me what Bitcoin was back then?
Nope, I wasn't actually.
Okay.
No,
all right.
Okay. I think that's when I convinced you to buy some.
And then I sold it. Well, anyway.
You sold it back then. Seems like a rough one to sell. But so what about Netflix? You like Netflix? Remember the FANG was all the rage?
Oh, yeah. Was that higher? No, it's made an all-time high recently, right?
Yeah, no. So Netflix trading at 300-ish, 370. Not, today it's at almost 900. Wow, it had a good day today. That's been, not today. I'm just saying, the recent run. I wonder if it had to do with the Tyson fight. We didn't. That's not on the list of things to talk about today.
Well, we can put it on the list.
You what?
All right. Well, let's.
Listen, how about Microsoft? One last good one.
Yeah.
Microsoft. All right, let's talk about this. This one is old.
It's probably 42. $42?
You think it was $42? It was $100.
$100. Okay. It had already run.
Today it's $417.
Yeah. Okay.
It wasn't that long ago. Think about that. If you are an original podcast listener, please email Derek. Let him know. He wants to know if you're an original 2018.
Well, it would be one of two people really that listened to the first episode, probably.
Besides your wife and son.
Yeah. I don't even think they listened. Somebody was a mistake. They found me, the first one.
Yes, I think you should send them Broken Pie Chart hats. If they send you an email, I think you should send them hats.
What are you promising?
I think email Derek Moore at derek.moore@zegainvestments.com and prove to him you're an original podcast listener.
I don't know how they would do that. I will tell you, though, there's a great quote from Chris Willix. And a lot of people start podcasts, but they don't sort of be consistent about it. And his quote was 90% of podcast launch don't make it past episode 3. Of the 10% that make it past episode 3, 90% of that cohort don't make it past episode 20. So simply by producing 21 podcasts, you're in the top percentile of all podcasts ever. Chris Willix.
Amazing.
So I don't know if that's still the case. That was a quote a couple of years ago, but yeah. And you've been on
I've been on more than 20.
For sure. For sure. You've been on most of them.
Well, congratulations.
Yes. Thank you.
Good work. Good work. Now you're a 1%er. Is that going to change your, your political alignment or anything like that?
Let's move to the markets, Jay. And all right, we got to talk about Bitcoin, and we got a nice listener email I'll read later about tariffs.
Okay. Oh, great.
Jonathan had sent something in. We'll get to that. We'll talk about Bitcoin, Nvidia. So Michael Saylor was on CNBC, and Jason Zweig wrote a piece in the Wall Street Journal. I'll link to it. And this idea of BTC or Bitcoin yield came up, and they kind of, I think it was Saylor, said, "Hey, we have a Bitcoin yield of 26.4%. So what does that even mean?" Well, apparently what that means is they look at the ratio of Bitcoin to the number of shares. And so if the number of Bitcoin per share increase, they look at that percentage increase as the Bitcoin yield.
Shares,
whatever the heck that means.
You mean coins, tokens? When you say shares, you mean shares of MicroStrategy?
Shares of MicroStrategy versus shares of versus Bitcoin.
Sorry, thanks for clarity there. I wasn't following.
Yeah. So I'm looking but I don't know if I don't think that's a very useless metric at all. And so here's the example. He said, as of November 17, the company owned 1.29 Bitcoins for every 1,000 of its shares outstanding, using a share count that assumed all of its convertible debt was turned back into stock. The ratio, quote unquote, was up 41.8% since December 31st of the previous year, when it owned 0.91 Bitcoin per 1,000 shares. So this is what Michael Saylor is calling the Bitcoin yield. It's the change in the number of shares, number of Bitcoins per share. I don't know what to do with that, but that's
okay. Well, I guess, right, because a yield, and so I missed that part of the interview. I saw other parts of the interview. So what he's saying is, gotcha. So if normally yield is what? Like the cash you get, the dollars
you get a dividend, or you get
a dividend.
Or you sell a call and you say, well, I generate X
out
yield.
Dividends in Bitcoin. He's just saying, hey, here's how much we have for each one of the outstanding shares we have. Okay. And he's in the process of accumulating more and more Bitcoin, right? So I wonder if he's going to have more shares outstanding. I wonder if he's going to buy back his shares.
Well, no, okay. So he may. What they've been doing is, and just kind of set the stage here, MicroStrategy, according to the Wall Street Journal article, owns 331,200 Bitcoins at last count, worth $31.2 million, and had about $4.2 billion of net debt. The market cap of MicroStrategies is $106 billion, and that may have changed. I think the article was written yesterday.
By the minute.
Yeah, by the minute. And it says it's paid about $16.5 billion for the Bitcoin it owns. So one of the criticisms here is that, well, you could buy the company, but the company is, $106 billion. It's like 3 point something times the value of its Bitcoin. And Michael Saylor went on, and he's like, well, look at Apple. If you collected all their net assets, it's trading at a way bigger multiple to its net assets. Oh, okay. But that's not how, Apple is really valued.
No,
It's valued at all the
there's a
cash
thing
flows that
called
come in.
price. There's sales, there's revenue.
Yeah.
Yeah.
So I don't know. I mean, I think, and what he's doing, talking about, diluting the share count, is they're issuing convertible bonds. And the convertible bonds, people buy those, and then they can convert into shares of stock at some ratio. And those bonds the value of those bonds is going to change commensurate with the price changes in MicroStrategies. I looked at and I'm not going to go into all the bonds, Jay, but I would find that interesting, but the listeners may not. They have converts, so convertible options, meaning you can convert your bond into shares of MicroStrategies, and that's one of the ways that the share count would go up, because you would dilute the existing shareholders. It is interesting too. Some of these have put options, not put options like you would think an option like we talk about and we trade. But bonds have call provisions and they have put provisions. Put provisions aren't really well known. Call provision says the company can call the bond away from you, normally at par or some other price, by a certain date. Some of these have put provisions where the holder of the bond could put back the bond to the company and say, give me, my $100 or $1,000 per par value of bond back. And there's different dates in there. So anyway, I mean, he's floating bonds that are converts, generate money to go buy more Bitcoin.
Yeah, I mean, he's giving those bondholders optionality. He's not paying them any interest or almost no interest, right? So, but he's giving them all optionality on the stock, and the stock is moving up. Yeah, a client of ours asked, has he created like an infinite glitch in the matrix where he is, by using, he's selling these convertibles that are based on his stock, and he's taking that cash and buying Bitcoin. And because he's buying Bitcoin, his price of his shares go up, and then people want to buy more convertibles, so they give him more money, and then it's just kind of this round and round. I mean, it's definitely an interesting feat of financial engineering. I'm not saying I don't have an opinion on how this goes and where this is, but I will tell you this from an options perspective and from a markets perspective. There is definitely a scenario where the tail is wagging the dog. What do I mean by that? Where the options, because of so much option activity and upside calls that are being bought and options that are being traded, it is forcing the market to buy more shares and push the price of MicroStrategy up. So we've called this before, a gamma squeeze. It's like a squeeze. I said gamma. Oh, sorry.
Oh, nice. Oh.
I did not open that door.
You owe me $1.
Nope. Yep. I'm closing the door. We're not going to talk about that. But what I am going to talk about is you look at that chart and, there's an obvious it's a short squeeze. It's not a short squeeze. That's not a short squeeze that's happening right now. It's derivatives pushing up the price of MicroStrategy, which then Michael Saylor is selling some shares. And I think he even said this, right? There was an article that came out, or there was I forgot. It's a short seller who said, look, there's, Michael Saylor selling some shares of MicroStrategy to buy more Bitcoin. So as his share price goes up, he's cashing in, turning around, buying more Bitcoin, pushing the value of the company up, right? There's all of these moving parts here. It's such an interesting dynamic right now. We happen to be on I feel like the cutting edge of this with, there's a fund that we manage that trades MicroStrategy options too, actually. And, it's just very interesting to watch the dynamics. The custodians and the primes are definitely, increasing margin requirements, doing things like, we want same day settlement and give us the cash before, options settle. I've never heard of that before. So there's just a lot of moving parts that are going on in the market right now with the crypto-based ETFs and stocks.
His premise, he said this on CNBC today. I think it was on CNBC with Andrew Ross Sorkin in an interview. He expects a 29% a year gain over the next 21 years in Bitcoin, if I heard that right.
You did. So that's what he said.
So if you think that, you're like, oh, I want to lever up and I want to, the question of why don't you buy Bitcoin versus buying MicroStrategies is, I feel like that's other people are talking about that. But if your premise is the thing is going to go up, so I'll ask you, like, if we look at MicroStrategies versus Nvidia, and this is since November 20th of 2017 to November 20th, 2024. So that's 7 years. Nvidia is up 2,660%. MicroStrategies is up 3,424%. I will tell you, up until very recently, Nvidia had outperformed that. Okay. Well, why does it have to be Bitcoin? If somebody thinks Nvidia or XYZ or whatever stock is going to go up, why don't you just do the same thing on there? Because Michael Saylor agrees it's not a currency; it's a digital property asset. What's so crazy about Bitcoin?
And he would tell you limited supply. As you watch that interview, he would tell you that there is.
But Nvidia is buying back shares.
Three times the demand for Bitcoin than being produced. So it's a supply and demand story. And so there's just not enough right now. Right.
But
so
this goes back, Jay.
Are you trying to make the case that, why don't you run this financial engineering on
I'm not saying that people should do anything. I'm saying it's it seems like they're trying to make the argument about Bitcoin, but I'm saying, okay, in theory, you could buy rolls of toilet paper if you think those are going to go up, and you issue convertible bonds to bring in. I don't know. I just, the premise is this is going up and up and up for people who believe in this. What if it doesn't?
And he would say, if you have to have the risk appetite for Bitcoin, and it's one of the more volatile assets that you could, if you called it an asset, I just said that word. I don't know if it is or isn't. But he would say the volatility of it is higher than the market for sure. If you're willing to accept the risk of Bitcoin, first and foremost, which I know you are not. So you should make no case for anything because you don't have the risk appetite for Bitcoin. But if you are willing, which is what he said, then you should have MicroStrategy because it's going to give you a higher upside exposure. This is what he said, because of this construction and the way that he's putting it together. He actually said, we're selling dollar bills for $3 a pop. Right?
Oh,
that's his quote. I don't even know what that means, Michael Saylor, but that was a fun one.
But aren't people, it's the spread though. I'm glad you mentioned that. It's really the spread between what you think MicroStrategies is going to do and what you think Bitcoin is going to do. And if that spread narrows back to the intrinsic value of the Bitcoin they hold, then in theory, you'd be better off having Bitcoin. If the spread expands from here, you're better off having MicroStrategies. I don't know which one is going to do what, but there's a spread, right?
Yeah. It's also your expectation of the price of Bitcoin.
Sure.
So you do your 29, 24, whatever the number is, percent over the next 20 years. Where did he land on the value of Bitcoin? 13 million a coin, right? So his position is, if you want to buy Bitcoin and you don't buy it now, you're missing out on 13 million per coin.
That's what they say.
That's what he says. I am not saying that. That seems wild, but it's a supply and demand thing, right? And so right now, that's the story: supply and demand. And then his stock is getting the feeling the financial market dynamics and technicals and things that are moving it around that continue to push it up. Look, yesterday, and so this is Thursday I'm talking about because we're recording this on Friday, it had a material sell-off on the highest volume that the stock has ever seen. A lot of people call that a reversal, right? That's a bearish signal. It was up again today, Friday, 6%, but it was down to over 25% in a single day. So you have to have risk appetite to be in this. It is by far right now, I would say he's probably got the most headlines of anybody, and it'll be interesting to see how it all plays out, but hard to not notice it. Doesn't mean you have to be in the game. It's hard not to watch it.
Well, it's just like when GameStop was doing its thing, we're fans of the market. So of course, we did 2 episodes about that.
Yeah.
You were never by the way,
GameStop story either, right? You felt that was a little bit of hooey. And it was a market play, which is fine. Call it what it is.
Citron, was it Citron Research or there was somebody who, maybe it's a hedge fund, that thought about that spread. And I think and don't quote me on this, but I believe I read they are shorting MicroStrategies to hedge Bitcoin because they believe the spread's going to narrow. So they're going to hold Bitcoin and short MicroStrategies. And if MicroStrategies goes down less than, you know what I'm saying?
I do know what you're saying.
As long as MicroStrategies doesn't go up more than
Bitcoin.
Yeah. Then I don't know their ratio or anything there, but
well, maybe a little bit goes a long way to offset the risk, right? So you weight it the way you want to weight it. The options are very expensive, right? I won't even.
But you know what I'm saying? It's like,
I know what you're saying.
You're 3 times the amount. Your MicroStrategy is 3 times the amount of their Bitcoin holdings. So okay, that's the spread. So if you think it's going to narrow, you do one thing. If you think it's going to expand, you do the other. I don't know. All right, we done with this one?
I can't believe you even brought it up.
I'm a fan of the markets. Here's another one. This goes to, imagine I told you 20 years ago, and this is a chart from Charlie Bolello on Twitter. Imagine I told you 20 years ago, you could buy a pizza company or you could buy Google. What do you think would perform better?
Feels like Google. Like Google's, Google runs the world. No, I mean they just got in trouble with Chrome, right?
According to they might have to get broken up, but according to Charlie, 7,370% cumulative return for Domino's Pizza versus 6,530% for Google since the IPO. Google IPO'd August of 2004, Domino's 2004, but July. Imagine that. Domino's is better return.
I mean, and actually in this chart that you provided me that I know people can't see, that spread has been wider. Like look back at, what do you think that is, 2021?
Yeah.
Right? I mean, look at that. I mean, so Domino's has been an interesting story. It's a great example of how a stock is different than the company. I think, they consider themselves a tech company in a lot of ways. When's the last time you ordered a Domino's pizza?
I don't remember.
Yeah,
but I have.
So if you do it now, right, you order it online and you get all kinds of interesting feedback and you can see, oh, it's being made. Oh, it's in the oven. Oh, it's in the car. Oh, it's down the street from me, right? I mean, they've really tried to make pizza, to a level where, the experience is different. It's still a Domino's pizza though. So I don't know.
Well, but they're not. But they don't. To your point, like they're not selling the best pizza. They're selling the operational efficiency.
Yeah, and stock versus the company, right? The stock versus the product. They're not always aligned. A lot of investors when they start out follow the mantra of buy what you believe in, right? Okay, so let's see. I work in an office and I use Microsoft products. I should own Microsoft. Okay, great. I like to go. I like a certain car. I really enjoy my car. Fine, I buy Toyota. Oh, I like this airline. I like Delta better than United. Buy Delta. It's not always the case where the company and the stock are tied together, and this is a great example where their expansion and their financials and everything makes a good stock, but I don't know if it makes a good product or company. Not sure. I never worked there. I don't know how people feel about working at Domino's. I don't know.
I don't know either, but delivery service. I think the last time, you know what? This is an off the cuff story, short one. I think my son wanted pizza, and we had ordered Domino's because it's reliable, it's quick, all that stuff. They called me and they said, you know what, our driver, he's fine, but he wound up in a fender bender. So we're not going to be able to deliver your pizza. But if you come in, we'll hook you up. So we went in, they gave us 2 pizzas and they gave us a bottle of soda. That's the last time I think I ordered Domino's. So there you go.
There you go.
All right. I don't know if you're aware of this, Jay. We've had an election. The markets have gone up post-election.
Oh.
Interesting chart from Macro Bond and Bloomberg. This may be news to you. Jay, the market's up after the election. What they found is the median S&P through election 1932 through 2020, it rallies up to Inauguration Day. This is the median. Who knows what it's going to do this time? After Inauguration, it kind of trails off and then it runs up higher. So this is apparently what the median performance of the S&P 500 has been.
So into Inauguration, the average, the median, like the return is generally up.
Mm-hmm.
How much? 4%, 5%? I think we talked about that last week.
Something like that.
Okay.
Sure.
But then there's a retracement back to what? Pre-election levels or post or right at the election? Got it. So what's that? Like 6 months later, looks like on this thing on average. So we could have this run up, then a dip, and then it looks like it's stronger through the end of the year.
Yeah, it's like 4 months post inauguration. It goes sideways to down, and then it runs up towards the end of the year. So
yeah. So look, I'm just going to throw a curveball at you. So we have put out data before around the election cycle and what the average return is in year 1, 2, 3, 4. Year 3 is, we know, always the strongest year, right? On average of an election cycle. I don't remember where year 1 landed.
1 and 2. So the midterm year was the one. Sometimes it wasn't that great, but remember the data was after the midterms. Okay. It was never down, or going back to Kennedy. I think year 1 is like it's positive, but it wasn't as positive.
Yeah, they're all positive because it's an average, right?
Yeah, but it's not positive as year 4 or year 3. So I think year 2 maybe was the least positive. So
okay, well, all right. I think you're right. I think so. This is all right. Well, we'll see. Like, I don't know. This one might be different. There's a lot of reasons to like this market. A lot of reasons not to like this market.
Look at the ETF performance since there's a chart from, who was this? I think Bespoke put this out on Twitter. And I don't know what the end date is, Jay, on this one, but since the election, they had the S&P up 3.14, Russell 2000 up 6.15. But then you look at the internationals like China, some of the stuff in Europe, all down. China's down 9% since the election. We know the currencies, the euro. I don't know if you looked at a chart of the euro recently, but it's heading towards 1. I mean, I don't know if we'll
1 versus the dollar, right? Yeah.
Versus the dollar, yeah. So
worried about that, yeah.
You kind of see this, and U.S. equities have done well. We know bonds are off a bit. So I don't know. What
I was surprised to see. I shouldn't say surprised. Gold is down, silver's down since that time. They were so strong going in, though, right? So the year to date for gold is still over 30% whenever this was put together. But since the election, down. Same with silver, down.
Look at natural gas. Isn't that crazy? It's on the right.
I see it. I see that for the year down 30%, but since the election up 12. So, there you go, right? This is a little bit of policy coming through, right? The exiting administration stopped a lot of the natural gas, sales. I guess it's something that they expect the current administration to support.
Yeah. I don't know if you've seen this, but so Javier Milei in Argentina became the president November 19th of 2023. He is a libertarian president, believes in cutting regulation, I think he said he's going to cut government departments. He wants to, really sort of overhaul the Argentinian economy. ARGT, full disclosure, Jay, I own a tiny little bit of this. And by the way, just because I own it, you shouldn't own it. I mean, not you, Jay, the audience. Yeah, like buy it if you want to buy it, don't buy it. But I mean, it's up. It's up like 80% since election day.
Wow. Yeah, the only Javier I know is Javier Bardem, who I'm bullish Javier Bardem.
Who's that?
It's the actor, Spanish actor.
Oh, yep. What's he been in?
I mean, one of his really good ones, No Country for Old Men, right? That's, that one.
Oh, of course. Yeah. I read that book.
007, right? I forgot which James Bond movie is. I could look at his, his movies. If you want me to go down, but
no, I know who you're talking about.
yeah, Skyfall was which I think is actually one of the best James Bond movies. But sorry, I got you off Argentina. This is the only Javier that I know.
Yeah, so it's been doing well.
He's in Dune recently. 1 and 2. Did you watch Dune?
No, I haven't.
Oh.
No, I haven't. But No Country for Old Men was that's a Cormac McCarthy book, who is a fantastic author. Got some great books.
What a good movie. Yeah.
Yeah.
I've just the way it ended, but like, did he walked away from the car crash? Is he okay? Did he get caught? What happened there?
Well, if you read the book, it turns out the story was really about the sheriff, not the two men who were antagonists throughout.
Yeah. Gotcha.
That was really it.
Yeah, but who was it? Tommy Lee Jones, right?
Yeah, no, that's right. That's right.
Sorry, I got to track. Back to financials.
I did look. I remember looking, and this is a Global X fund. Again, it's not a recommendation. Do your own research. But it's the only Argentinian fund that I could find. It's got like Mercado Libre in it. It's got a lot of names I can't pronounce. I'm sure they're fine companies. So anyway,
it's not an image.
This has run up quite a bit, though. This is like,
and so are you bringing it up because you think it's a story of what? Like, because we were just talking about the election.
It's related to it.
Yeah,
I think Milei is. I think the thought is that the Trump administration would be friendly to him. He has met with President Trump, President-elect Trump. I guess you call him both, right? Because he is both.
Yeah.
But we'll see. I mean, Argentina has been a lot of inflation. They've had a number of defaults, so it'd be interesting to see if somebody can really turn that around. Okay, Nvidia, by the way, is valued at more than the entire UK market. I don't know what we can say about that, but would you rather own the entire UK market or own Nvidia? I'll leave that as an open question to the listeners.
Okay.
By the way, all right, this actually gets. We were talking about some of the international ones being down, and I wonder if that is because of tariffs. And I will tell you that we got a note from Jonathan, one of our listeners. Jonathan, thanks for sending the note. People can send notes to me at derek.moore@zegainvestments.com. That's DEREK.MOORE at Z as in zebra, E as in Eddie, G as in George, A as in Apple. Investments is up to you to spell correctly. So we talked about tariffs last week. Jay, he wrote, quick note regarding your tariffs on sugar points. You are right, but the difference with the situation of these proposed tariffs is you don't have a domestic industry to defend in many cases, especially when talking about China. So many of these tariffs would be great ideas if, and capital if, there already was a competing domestic manufacturing industry of some scale. It's not the same as sugar. How do you start up an industry in the face of a situation where you have to import all your startup inventory, materials, and so on? You're still correct. The media is misleading about it, but don't join them and mislead the other way. Loving the show and just ordered your book. Thanks, Jonathan. Appreciate the note. No, those are all good points. I think it's if this administration used tariffs as a way to get tariffs on our stuff down, maybe that's the angle. I think. I don't think I'm not a fan of tariffs. I think we should have really open trade, free and open trade. Countries should make the stuff. If countries can make it cheaper, faster, better, those countries should make it. It's more beneficial for the country to import it and make the stuff that they can make cheaper, faster.
You're not an America first guy.
I'm not saying anything like that. I'm just saying. But no, they're
I tried to set you up there. I'm sorry.
No. But just JIT or just in time inventory is another thing. During the pandemic, it's like when you have this global system and you don't have domestic production of certain things, you say, okay, well, what if we can't get this or get that? And there is a push right now to bring more of this domestic manufacturing here. We see in Arizona, Taiwan Semiconductors building a massive plant in Arizona. And I think they got money from the Biden administration to do that. But that's part of it. You want to try and spread the risk out a little bit. But I appreciate the note. And no, he's right.
I think it's our point. It's different. Yeah.
Yep. Send notes, though. Thanks, Jonathan. Appreciate it. Hope you enjoy the book. All right. Let's go to Nvidia. Back to Nvidia, Jay. It used to be the hottest thing to talk about until MicroStrategies. But I don't know if you knew this. They reported earnings.
I did. That was last week.
Did you catch that?
Yeah, I heard this week, but it'll be last week when people hear this.
That's right.
Did catch earnings, yeah.
Well, Bloomberg had a couple interesting charts on TV. One of them was Nvidia getting more orders than it can supply. That was the headline of their chart. And they showed a chart of inventory to sales is the lowest in 2 decades. So in theory, if you're making a lot of sales and you don't have a lot of inventory, it means you're making a lot of sales and you're not sitting on inventory, right? I mean, isn't that the way you would read this?
I mean, sure. Economic. Okay.
Yeah. So that seems, I mean, I don't know what the stock is going to do, but that seems positive.
Positive.
Okay. The other one is Nvidia growing into valuation. The stock near record price as the PE nearly half of its recent peak. So, Jay, you've discussed this on a previous podcast, the idea that while the stock is going up, the forward PE has been coming down because the expectations of future earnings, and they've grown revenue, 94% year over year. Those expectations and the actuals have been going higher.
Yeah, that's the thing about, forward-looking earnings. You don't know what it is, right? And so we hear a lot, and it is one of the strongest points against getting long this market right now, where you'd say PE ratios are high. Well, you don't know what the E is going to be on the PE ratio, right? You don't know what the earnings are going to be. And Nvidia, look, this is, I mean, you've talked about this, that, the run up in the stock, when you look at it, can be justified because it has not exceeded that number, like this PE ratio. It's coming down, so it's growing into its earnings, right? It's growing into its price. Its earnings were underestimated because it is outgrowing the estimates, right? So the price to earnings ratio is coming down, which you would think is crazy when you have that kind of valuation that it has, but everybody's buying it right now, right? I mean, I don't want to get too far off of Nvidia. I have one comment to make, but any other comments on the PE before I hop in with something else?
Pipe in with something else.
So going into earnings, and we talked about this, we looked at the option chain, right? And it was about, we said what? I think it was like, we said it was about a $10 move, $11 move. We said that would get bigger as you get right to the earnings announcement. And yes, it did. So going into the earnings announcement, the Friday options, the next options, were pricing in a 13-point move on Nvidia, right? So it's a $140 stock, $143 stock. Was pricing in a 13-point move, meaning if you bought the call and the put, you needed a 13-point move to break even.
It's 9%, right?
It was about 9%.
Yeah.
Do you know how much it ended up moving the next day from close to close?
What was the close to close there?
All right, so it closed that night on the 19th. It closed at 147.01. The next day, it closed at 145. Sorry, that's 11:20. It closed at 145.89. So that was the 20th. It closed at 145. Then the next day, it closed at 146. So you got like a 1.5 point move. If you were a buyer of options, you got smoked. So for anybody that is reviewing this for compliance reasons, but you got smoked. You didn't get the movement the options market was predicting. If you were a seller of options, you earned almost all of what you sold, right? So it was one of those scenarios where the options market just got it wrong. Now, it had a decent, up-down movement, right? Like the peak to trough that day, the low was 140, the high was 152. But at no point did you get the 13-point move off of the 145. So at no point could you, and look, you couldn't have gotten out of it, even if it did move exactly 13 points, you wouldn't have gotten it, right? The options would have been a little lazy. You wouldn't have realized it. So long option buyers on Nvidia probably didn't do great that day. Short option holders loved the way it went that day.
we like to bring this up because it sometimes is different. I mean, we've given examples of this is why it's so hard. Everyone thinks, oh, buy the straddle. It might work, it might not. That's a dangerous trade. Or I'll sell the straddle. Might work, might not. It's a dangerous trade, especially around earnings. So
very muted move.
Yeah, there's
definitely
interesting.
Disappointed people that were trading the options.
I was sort of really surprised. It was almost like Nvidia delivered. They beat the estimates. I think they raised guidance, but it wasn't enough. But it wasn't bad enough. And I say bad enough meaning the beat wasn't
underbeat.
Is
that a thing?
Yeah.
I mean, inventory store is a huge story. Like, we can't make them fast enough, right? I mean, that's what he's saying.
Yeah, and the other, I think, so the Blackwell chip, is that the next generation?
This is what he's selling now, I believe.
Is it selling, or they just started manufacturing? It's going to sell.
I should pay more attention to fundamentals. I don't know.
Yeah, I don't know.
The one he's talking about. It's the only one they're talking about.
Yeah.
Right? It's like 3 times faster than the existing one. Yeah, all kinds of good stuff.
Well, Nvidia, when you look at it, we were looking at a chart of the SOX Index, the semiconductor index, and there's an interesting technical pattern there. But Nvidia has been outperforming the SOX in general, the semiconductor index. And it seems like Nvidia is, again, we don't know where the stock is going to go, but it's been doing better than the general semis for sure. And it seems like they still have a competitive edge. Again, I don't know what the stock is going to do, but are you familiar with the diamond pattern, Jay?
I'm familiar with it only because it's every so often, not very often, but rarely you bring up the diamond pattern to me. It's not a bullish pattern.
No. I mean, and I don't know what the probability or the percentages that this is right or not right. But yeah, it looks, we'll put it when we put it on our website, we put the notes up. I'll put this chart in there so people can see it.
Describe the diamond pattern.
Yeah, just think about a stock sort of runs up, it runs down, and it gets narrow at the edges. And so if you drew like a line,
like a rhombus, really,
it's really this one is. There's better diamonds.
I don't want people to think we're talking about trading diamonds, right?
No. This is like a diamond pattern. If you draw the lines, it sort of looks like a diamond, or as you said, a rhombus. Yeah. And the idea is, if you get a breakout down, that potentially could be a bearish pattern. Then you draw your targets a little bit lower. We don't know what's going to happen with this, but that you don't see the diamonds very often, so it came up. Nothing else really there, Jay. I don't.
Stocks in the semiconductor index, diamond
in the
pattern,
semiconductor.
Yeah. Got it.
Not in Nvidia.
Not in Nvidia. Nvidia continues to have higher highs and higher lows.
Let's talk about. Let's see. Did we talk about this? No, we didn't. We talked about it in our investment call. I noticed that. So Morgan Stanley, and is it still Michael Wilson at Morgan Stanley?
I don't know.
Well, Morgan Stanley last year, their year-end S&P 500 target that they made in December of 2023 was 4,200. I don't know if you saw it today, but the market closed above 5,900.
I did see that today.
Yeah, so it's above 5,900. They said 4,200. Morgan Stanley next year says they see 6,500 as their base case by the end of 2025. So they said 4,200 was going to be the ending value this year. For 2025, they say the ending value is going to be 6,500.
All right, and we were at 59.69. So they're going out on a limb and giving you what, 530 points?
Yeah, they're giving you what?
Up.
That's up. That's what everybody does. They're like, oh, we'll take the market.
It's kind of up. Like, come on, like, please stop being so vanilla. It's flour. It's a bag of flour.
Well, Goldman says the same thing, 6,500 by the end of 2025.
Goldman, yeah. Same guys that said 3% annual average return over the next 10 years.
Well, they said over the next 10. This is the next year, though.
Look, I mean, what are we talking about here, right?
Yeah. No. Morgan Stanley actually they put a base case, and then they did a bull case and a bear case. Like, that's generous. Like, oh, if the market goes down, we think it will go here. If it goes really up, it will go here. But anyway, Their base case was 6,500. Their bull case, I think, that looks like about 7,400. And their bear case, I'm going to eyeball it and say 4,700, something like that. I don't know the exact numbers. It's a chart. So, all right. I don't know what to do with that.
Well, look, it's so fairly conservative estimates in the past from Morgan and Goldman are even they are saying 6,500 by 2025.
Yeah.
And that's a way to position it.
Yeah. Yeah. No, I think that's right.
Okay. All right. There we go.
I mean, by the way, they I'm sure Goldman, 4 months ago, not Goldman, Morgan Stanley 4 months ago wasn't like, no, we still see 4,200. They change. What happens is the investment banks, if markets go up, they change it, they bring it up, and if they go down, they lower it.
It just goes to show it doesn't matter, right? Like it's very easy to get it wrong when you're making estimates on where the market is going to go. There's so many factors. I'm terrible at it. Right. I'm not making any market calls. It's really hard to make those calls right. So the only call we ever really make, right, is markets generally go up. So we say be long, but you don't know when they're going to sell off. So be hedged. I mean, that has always been our mantra, right, since we've been doing this here. So it's one of those things that it's a way to keep yourself invested in the market. But, it generally goes up. Right. So and if you're worried about timing, I had a client at dinner with them last night. And we were in something, we were talking about one of his positions, doesn't matter, and it went up. And he goes, but you never sell it. I go, no, I just keep moving up your hedge. He goes, so we're not going to sell it? I said, do you need the money? He said, no. I said, so let's just keep moving up the hedge. It has a tendency to go up. Stay in it. We're not calling it top or bottom. It's hard. Move up the hedge.
You know what's interesting about making these predictions? So let's say if you're making a prediction, all right, so in December of 2023, if you were making a year-end prediction on the S&P, essentially what you're predicting is what the forward 12-month earnings estimate per share is going to be a year from then.
I mean, that's one way. Like if you're an earnings guy, that's one way. It's certainly not the way I look at it.
But let's say you knew the forward estimate was going to be $264.12 over the next 4 quarters from now. And you'd say, oh, I knew the multiple is going to be 22.59.
Okay.
Would have nailed it, right?
Yeah, you got to get a couple things right there. You would have nailed it.
Yeah, and you break it down even further. Sure, I mean, I could say, well, the EPS, but you could also say, oh, I'm guessing what sales are going to be, and I'm guessing what the margins are going to be, and how many buybacks there are going to be, and who's coming in the index and who's going out out of the index. It's. I think hopefully I'm making it clear. Like these
There's
predictions,
way too many variables, right, to get that number right. Yep.
And I think when people say, like to your point, Jay, what do they put 8-9% on top of the current market, and they said, oh, we think it's going to go 8. Yeah, that's not really going out on a limb there. Nope. What does Tom Lee say? By the end of the decade, did he say S&P 15,000?
Who?
Tom Lee.
Oh, I didn't hear him say that. I would not be surprised, though. He's usually fairly bullish. The most bullish, I should say.
Tom Lee. I'm going to look it up, and if I don't find it,
you try the Dominos Pizza machine. Do they got a search engine?
Yeah, well, they should.
Okay.
20. So end of the decade would be what? 20.
The 2030 decade is December 2029.
Yeah. Price prediction. I should have done this, before we were on.
Right. We like the audience loves hearing you tap the keyboard. I know it means like it's real. It's happening live.
Okay. This is half-baked internet research. In a prediction that sounds like something straight out of a sci-fi movie, Lee thinks the S&P 500 could hit a mind-boggling 15,000 by 2030, all thanks to artificial intelligence and millennials finally realizing they need to earn more than they spend on avocado toast.
Who threw in the avocado toast comment?
I don't know. I'm just reading this off the internet.
So that's 151% increase from here. So it's
okay,
a double and a half.
How many years? That's in 5 years.
A double and a half. And he's going to give you 5, 6, 7, 8, 9. He's going to give you 6 years
So what is that, 11% a year?
6 years, well, if we're using the rule, a double and a half, I think it's a little more than that.
Well, I'm trying to get the annualized.
Yeah, I know.
All right, we could do the math, right? But
I'm sure there's a spreadsheet somewhere that could do it, or maybe a complicated calculator. But
yep, it's 254%.
A double
right?
every 10 years, right, is 7%. So you flip that. If you're going to get 1.5 doubles, it's got to add to the 10. Really should be better at this. Isn't it 15?
Yeah, you could be right.
Yeah.
I have the wrong calculator to do it.
Okay.
But all right, so Tom Lee says 15,000. That'd be pretty cool.
Yeah.
All right. Any recommendations, Jay?
Okay, I do have a few. So
I love it.
I do have a few. So look, I touched on one of them a minute ago. On Max, formerly known as HBO Max. Not a different kind of Max. There's a lot of Maxes in my life right now, but let's just talk about HBO Max or Max.
Okay.
There's a series. There's a Dune series, right? And I've only seen one episode, and I really liked it. I think it's great. So I like that one so far. Very first episode in. Obviously I don't know where it's going to go. Hopefully I'm going to get the second one this weekend. So I like the Dune one. A recommendation that I've made in the past is Only Murders in the Building on Hulu, and I think the Steve Martin and Martin Short just dynamic is hilarious. The dialogue continues to be really, really good. So I'm enjoying that too. That one, I think it's almost all out. I'm in the catch up mode. And then one that I think you originally had recommended to me is on Apple. It's all right. Now I'm drawing a blank. It's the one with the psychiatrist with Harrison Ford in it. It's Shrinking.
Oh yeah.
Great dialogue, hilarious, cracks me up every time. So those
I watched season 1. I haven't watched season 2 yet.
No, go ahead. It's not done yet, so they're still coming out. So I think 7 have been out. So you got some good catch up.
Yeah, my new rule is I'm not going to watch an Apple show until all episodes are out.
Yeah, let it queue up a little bit.
Yeah.
There you go. Those are my 3.
Well, I watched the first year of Tulsa King, and I went back and watched the second year. You told me you liked it, and it was good. It's a good show.
Not bad.
Yeah. And Twisters is out now on Peacock, the movie.
Yes, you recommended that to me. I watched it. Not bad.
I think it was solid.
Solid. Yeah.
Yeah. I saw it in the movie theater. I liked it.
I bet that was great in the movie theater.
It's fantastic. So, All right, that's it, Jay. I think we beat this up enough.
300 in the books.
That's right.
300 in the books. Congratulations again, Derek. I'm going to stop talking about it, I promise.
All right, everyone. Thanks for listening. By the way, give us, 300th episode. Go in, give us like 5 stars. Only rate us if you're doing 5 stars.
I can't
on
believe
Apple
these guys
Spotify.
have done 300. It's amazing.
Yeah, like just say stuff like that. We don't have hats. Let me just correct that. We do not have broken pie charts.
I think if you get enough proof of OG Broken Pie Chart podcast listeners, you should make hats.
Yeah, I don't know about that, Jay.
We're going to get bobbleheads of Derek.
Here's the... this is the original, Jay.
That's the original music.
Welcome to the Broken Pie Chart podcast.
Oh, there you are. So young.
Episode number 1.
There you go, Jay. Episode 1. Found it.
Episode 1.
That's it. We're leaving. We're done.
Bye, Derek.
I'm calling it. See you, Jay. See you, everyone.